Hi, accounting students. This is Mrs. Blomquist. It is the last chapter of our book that we're going to be covering this year, and we're looking at Chapter 16, Financial Statements and the Closing Entries for a Corporation. There are 5 lessons in this chapter, and we're going to be looking at preparing the income statement, the statement of stockholders' equity, preparing a trial balance, recording closing entries, and then preparing a post-closing trial balance. So the first objective in this lesson is to prepare the income statement for a merchandising business that's organized as a corporation. And you want to just remember that there are really 2 big differences between the financial statements that are prepared for a service business organized as a proprietorship, which, if you remember, that was what the first half of our book was about, and then the financial statements that are prepared for a merchandising business that's organized as a corporation. So really the 2 big differences are that you need to account for the merchandise, and that all of the accounting and reporting for the changes in stockholders' equity needs to be included as well. So the first lesson here, preparing an income statement for the merchandising business. So we'll just remember that we have to incorporate information about the merchandise and the stockholders' equity piece. All right, so use of financial statements. To remember that the financial statements, the income statement, and the balance sheet are going to be very similar, but we cannot forget the information about the stockholders' equity. Okay, at this point, I'm going to encourage you to make sure you have your book out in front of you. Page 473 and 474 have the adjusted trial balance that you're seeing right here on the left, and the income statement over on the right for the 3 green product business that we have been working with. So you just want to remember that we use financial statements, and we use the income statement really to compare the financial condition and the progress for a company over more than one or over one full fiscal year period. And then managers and owners use these reports to make business decisions. And they use these reports to look at where they're doing well, where they might want to improve, how they can focus and target their efforts going forward, so that the income statement really contains some very, very important information. As we move forward then, you want to just make sure that you understand the operating revenue part of the income statement. So any revenue that a business earns from normal business operations, selling merchandise, that's operating revenue, okay? The amount of sales minus any discounts or returns and allowances, this is called net sales. So you want to make sure that you remember net is that amount that takes into account any returns or allowances or discounts. All right, so here we are, we're looking at the operating revenue portion of the income statement, and you can see what we're going to attribute to sales, and then where we have the subtractions, right, or the debits that are sales discount, sales returns, and allowances, so we can get a net sales number. And again, we just want to make sure that we are correctly reporting all of the information on the income statement. Now, to remember that the revenue account is sales, and then we have the 2 contra accounts that are reducing the amount of our sales. So we've got that discount account and the return and allowances account. And again, we talked about the reasons why you would keep those 2 accounts separate, why you would want to keep the discounts separate from returns and allowances, in part because you want to know how many of your customers are taking advantage of any of the discounts that you're offering, but you also want to keep track of, hey, is any particular product or merchandise that I'm selling need to be returned frequently, or am I offering a lot of allowances on any particular item, so that you know if that's some kind of merchandise you want to continue to provide in your business. Anytime you see high levels of sales returns or allowances, you would really question the quality of whatever item is you're selling. All right, so we look at the total for that contra, and then you go ahead and say, hey, here's what our net sales number really is. All right, so the cost of merchandise sold section is going to have information, the original price of all the merchandise sold. That's the cost of merchandise sold. It's also sometimes known as cost of sales or goods sold. The operating revenue that is remaining after the cost of the merchandise sold has been deducted. Now you're talking about profit, gross profit. Sometimes we talk about it as gross profit on sales. So you just want to know that some of those terms are really going to be synonymous. And really what you want to focus on here is that you take operating revenue, you subtract the cost of your goods sold, and that's how you come up with your gross profit number. Okay, so here again, we are looking at that income statement. And if your eyes are bad like my eyes are bad, you might want to check it out on page 476 because it's going to fill up half the page and it's going to be a little bit bigger than this tiny little thing that you're looking at here. All right, so you can see at the cost of our merchandise sold, and we're going to look at our inventory that we had at the beginning of the year. That's this number. And then we're going to go ahead and add to it our purchases. We're going to subtract our purchases discounts and returns and allowances. And then we're going to figure out what our net purchases are. After that, we're going to go ahead and look at the total cost of the merchandise available for sale. We're going to subtract the merchandise that we still have in inventory at the end of the year to get for us the cost of the merchandise sold and our gross profit number. Notice that we have here a percentage, okay, as a percentage of net sales. So obviously our net sales number is 100% of net sales. Our cost of merchandise sold is 40% of our net sales, and 41. And our gross profit is going to be almost 59% of a percentage of our net sales. Now, you want to make sure that you're just really reading this information closely and that you're identifying, hey, we have this purchases account, but then we also have this contra account situation going on for purchases. All right, now we're looking at the cost of merchandise sold section on, again, the income statement. So, whoops. You're going to go ahead and look at, here is sales, here's our sales discount. We're totaling up the two contra accounts that reduce the amount of sales to come up with our net sales amount. All right, so completing the income statement for a merchandise business. Expenses that are incurred by the business under normal operations. So the regular day-to-day stuff, that's an operating expense. Operating revenue that remains after we go ahead and subtract for the cost of merchandise sold and operating expenses, that's where we come up with income from operations. Sometimes we call this operating income. All right, then, oh my goodness gracious, now we're on page 478, and these income statements in the slideshow are so small, so I would really encourage you to open up your book and make sure that you can see them in here. So you're looking at our section that's got all of the operating expenses. Then we've got all of the income from operations. Then we have other revenue, and under other revenue, we're listing interest income. And remember, we separate out interest income because interest income is not part of our daily or our regular business operations. So we're going to separate that out. Our business is not in the business of charging interest. So that's not part of our regular operating procedure. And then we want to look at our net income before we go ahead and pay our federal income taxes. So this is the net income before federal income taxes. And we obviously need this number so we can go ahead and calculate how much money we owe to the federal government. And then once we subtract the income tax that we had to pay, now we are at our net income after taxes are paid. Okay. And remember, we double rule at the bottom to show that we have tied out or that we net out or that we foot. All right, then we look at that vertical analysis percentage so that we can see that we're talking about a percentage of some information, which is why we do the vertical analysis percent. Now, you want to be paying attention to these vertical analysis numbers are really important to management. That's part of why we generate these reports. All right, so as we're moving forward here, major difference between income statement for merchandising business and a service business. Again, you just want to be thinking through, wow, cost of merchandise sold is what's really important here. How do we calculate or how do we figure out the cost of the merchandise that's sold? Well, we take the beginning inventory, we add purchases, and then that's the total cost of merchandise available for sale. Then we subtract our ending inventory, and now we have the cost of the merchandise that was actually sold in the fiscal period. So why is interest income presented in a section other than operating revenue? Interest that we get on notes receivable, again, not normal operating activity. We're in the business of selling merchandise, not charging interest. Okay, at the end here, I want you to think about some key management decisions that might be made related to owners or managers reviewing an income statement. And you would just be thinking about, hey, let's look at our income statement. Do we have expenses in any category that are particularly high? So how can I reduce expenses? Or you might be looking at where your revenue is coming from, and you might determine, we have some areas where we absolutely could increase revenue. So managers are always looking at that income statement to try to better the business. All right, from here you're going to go ahead and do the forms online, work together and on your own in Aplia. Good luck, everybody.